just like to thank everyone for joining us today. And we're really happy to see so many people tuned in to find out about what charitable funding changes you ought to pay attention to in 2023. Today's topic is part of our legal series where we bring light to topics in legal compliance for nonprofits in an interactive and straightforward way. My name is Liz Tang. I use the pronoun she, her, and I'm the education coordinator for IntegralOrg. I'll be assisting Yvonne in hosting this webinar, and I'm also joined by Jennifer, who's also helping me host this webinar. I'll be monitoring the chat, and without further ado, we'll just go right into it. It is important that we acknowledge that what we call Alberta is the traditional and ancestral territory of many peoples, presently subjects to Treaty 6, 7, and 8, namely the Blackfoot Confederacy, the Kainai, Piikani, Siksika, the Cree, Dene, Saulteaux, Nakota Sioux, Stoney Nakoda, and the Tsuut'ina Nation, and the Métis people of Alberta. This includes the Métis settlements in the 6 regions of the Métis Nation of Alberta within the historical Northwest Métis homeland. And at IntegralOrg, we do respect the histories, languages, and cultures of First Nations, Métis, Inuit, and all First Peoples of Canada who have lived in and cared for these lands for generations. And we are grateful for the traditional knowledge keepers and elders who are still with us today, as well as those who have gone before us.
Thanks, Liz. Well, this is just an overview for you all, and welcome to the overview of the income tax changes that you might be concerned about from the last few months, last year, right to January of 2023. And income taxes is a legal issue, but it's also an accounting and a funding issue as far as charities and nonprofits go. So that's why we have 2 other wonderful people to help us inform you on these basic changes. So the overview we're going to talk about today, I'm going to give you a very high level highlight of what the changes to the disbursement quota has been and what it means to your types of organization. Then we're going to talk about grants to non-qualified donees. I'm going to explain what the new term is, grantee organizations in the Income Tax Act. And I'm going to talk about the important distinctions between the kinds of charitable funding you could make before and what you can make now. Then the most important part of this whole thing, as far as I'm concerned, is the financial reporting requirements that you may be concerned about that you have to begin to do if you're going to make any changes in the way you you grant funds. And then finally, we're going to talk a little bit about gifting requirements if you're making direct gifts or you are receiving directed donations. And then we will hopefully have about 10 minutes to go through question and answers. So without further ado, let's talk about the disbursement quota very quickly. What is a disbursement quota? We've heard that word for many years. It is in the Income Tax Act, and I'm just going to give you a very general definition. And it is the minimum amount that registered charities are required to spend on their charitable activities on an annual basis. So note that I said charitable activities. So charitable activities are not administration, not fundraising, specifically on the activities that are in furtherance of the charitable purposes that CRA granted your charitable status for. And we'll talk a little bit about that when we talk about grantee organizations as well. But it's an amount of money. And what's the big deal? What are the changes? Well, we have a little illustration on the next slide, which sort of makes it concise. Effective January 1, 2023, the Income Tax Act was changed to make that disbursement quota, what used to be 3.5% for organizations, increase to 5% effective January 1st, 2023. And what that means to you, it depends on whether you're a charitable organization or a public or a private foundation, really. And just so you know, and I say this often in sessions with nonprofits and charities, the name of your organization is not a conclusive indicator of whether you're a private foundation, public foundation, or a charitable organization. That's a designation that Canada Revenue Agency Charities Directorate would have given to you upon your registration as a charity. And you can find that certainly in there on the public website for any organization. And why does that make a difference in the disbursement quota? Because now every organization, whether you're public or private foundation or a charitable organization, you all have a disbursement quota that is now 5% annually on the portion of your assets that exceed $1 million. Just so you know, that's the technical stuff. And there's a lot more technical stuff that's associated with this. However, if you're a charitable organization, chances are you're the kind of organization that's rolling up your sleeves and actually doing the charitable work. So be assured that probably much more than 5% of your assets is used in your charitable activities anyway. So often for charitable organizations, it's not that much of a concern that the disbursement quota has been raised 1.5% per year. Public and private foundations, however, are those kinds of organizations that generally give more of their funds to other registered charities or other organizations. And it's those organizations, some of them that have maybe a lot more money than the charitable organizations that do the work. Some of them are concerned that the disbursement quota has been raised. So they have to disperse 1.5% more this year than they did last year, if in fact they're operating at the minimum disbursement level. Remember, this is a minimum disbursement level. There's no limit on what they could disperse as far as public and private foundations. But what I'm in the toolkit that goes with our session today, we're saying that charitable organizations should know that now there might be more money in flow from some of these foundations that give money to qualified donees. So if you're a charitable organization, you should be thinking, oh, wow, there might be access to more money now because they have to give more money. And if you're a public and private foundation, potentially you're saying, oh, wow, we have to give more money now. So let's find a charitable organization that we can increase the funding for. So really, that's what it means to you. It's not a big deal, but it is big, a concept for you to start thinking of, whether you're a charitable organization or one of those kinds of foundations. Next slide, please. So that's the end of my discussion on disbursement quota. It's just a very simple concept that you just need to be aware of. The most important topic that we're talking about today, the big change, is the gifts or grants you can now make as a registered charity to grantee organizations. So let me just set the stage. Before the Income Tax Act was amended in 2022, charitable organizations could carry out their activities to achieve their charitable purposes inside and outside of Canada. So it didn't matter where you were actually doing your work, by the way. You could only do it in two ways. And this is something you've probably heard many times. I've said this many times, and every publication from CRA emphasizes this fact. The first way you can carry out your charitable activities is through your own staff and volunteers. So the people who volunteer for you, your board of directors, your volunteers, the people who you employ, your staff, those are the people doing the charitable work. That was fine. Or through an intermediary or an agent over which your charity had to exercise direction and control. You've heard those words before, certainly in context of this change to the grantee organization regime, as we're calling it. You've heard the word. Now we don't need to use an agent or an intermediary over which we have to exercise direction and control. So that was CRA saying that is how a charity carries on its own activities, either through its staff or volunteers or through an agent. An agent in law you're legally responsible for. So that you have to think about that too. Or obviously the other way charities could make their purposes, achieve their purposes, is to give gift to qualified donees. Qualified donees, you've heard that many times too, and that is generally other registered charities, crown corporations. There's a whole list of organizations that are qualified donees, registered Canadian Amateur Athletic Associations, the United Nations. There's a list of them, but it's very finite. So that's what you had to do before. So now I would like to ask you guys, what have you been doing up until now? We have a little poll for you. How does your charity currently spend most of its resources? Do you spend your resources on your own activities? Do you use agents or intermediaries either here in Canada or anywhere around the world? Or do you give to qualified donees, other registered charities? Or really, you don't really know, you just do your work? Let everyone see, because I'm actually floored by the answers here. Very interesting that most of you are indicating that you are spending your charitable resources on your own activities. So that probably means most of you are charitable organizations operating in Canada, probably. I don't see anyone using an agent or intermediary. And very few of you are giving to other registered charities or qualified donees. And only a few are not sure. I'm really happy to see that most of you know where your resources are going. Good, thank you. So I don't know if you could stop the poll on that, because it looks like overwhelmingly you're all doing your own thing. So maybe because you're at this seminar, you want to now find a way that you don't have to keep a big staff, or you don't have to keep a contingent of volunteers always at the ready to do your work, but that you have the option to have potentially another organization to work with you to do the work. And that is what we're calling now the third way to have organizations do the so the third way would be now you can make grants to grantee organizations. So I just want to briefly give you a very high level on what that means. I want you to go back to the slide before there, please, if you don't mind. I just want to make sure that all we're talking about today is to allow you to understand the changes. What does this mean for accounting and reporting, which is the most important thing you would need to know if you actually are going to embark upon this? And what does this mean for gifting in general? Thank you. So the third way is making grants to grantee organizations. So the amendments to the Income Tax Act that were made last year now state that registered charities, and registered charities under the Income Tax Act, just so you know, include private foundations and public foundations and charitable organizations. They can now make grants to a grantee organization. And the new definition in the Income Tax Act, grantee organization, says it includes a person, club, society, association, or organization, or other prescribed entity, but does not include a qualified donee. So obviously, if you're giving money to a qualified donee, you could always do that, and you still can do that. There are certain limits for charitable organizations when they give to qualified donees as opposed to foundations, but we're not going to specifically talk about those today. But all this is to say is that you can still make donations to qualified donees, or use agents or intermediaries to do your work if that's best in the circumstance. But these new classification of grantee organizations, those organizations who you could not gift money to before, is now open for you to consider. So that would be an organization that you potentially would have worked with before, but you were stopped from giving them money because they weren't a qualified donee, or you didn't want them to be your agent or intermediary for numerous reasons. Much of it had to do with you didn't want to give money and then have to control everything they did with it, or you didn't want to give money to them and then be legally responsible for them as your agent, because you were the principal as the charitable organization giving the money to another entity, and they are simply your agent. But now grantee organizations are not agents, they're grantee organizations, and that's the best thing ever. So next slide though is interesting, because now I'm thinking, well, a grantee organization by that definition looks like pretty well anyone, right? It even use the word person. So what are the rules? Can a registered charity grant to anyone now for any reason? And this is where you really have to dig into the details and look at the rationale behind this change, and what the Canada Revenue Agency Charities Directorate, who is a regulator of Canadian charities, what they think this means. And the draft guidance from CRA that was sent for public consultation, we've given you the link here, it goes into great details. A charity must ensure and demonstrate that the grant to any grantee organization follows certain requirements, of course. First of all, the grant must be made in furtherance of a charitable purpose of the charity. So you've heard me speak about this before. If you've listened to seminars on Basic Charity Law 101, your charitable purposes of your charity are found in your incorporating documents or amendments thereto that have been approved by Canada Revenue Agency as charitable purposes. So you really, really need to know what your charitable purposes are. Then, assuming you know that, then the grant must be exclusively applied to charitable activities in furtherance of that charitable purpose. So the words here, exclusively applied, meaning you have to say, here's our charitable purpose. We need you to execute on this charitable purpose for us. Here's our grant. You must use it exclusively for this purpose, no other. So that's key. And then the one that involves all the important record keeping is the third one. You must maintain your documentation sufficient to demonstrate the purpose for which the disbursement is made, and that the disbursement is applied exclusively by the grantee organization for those charitable purposes and furtherances of your charitable purpose of your charity. So you see the transaction is being followed to not only is it your purposes, but that the grantee is accepting the money and applying it in the way it's supposed to achieve your purposes. So it's a little bit different than the agency relationship, but it still has a lot of controls behind it. Next slide, please. So the reporting requirements are key here, I think. And to talk about reporting requirements, who better to ask than an accountant who knows all about the Income Tax Act and the books and records. So I'm going to ask Stella to give a little high overview of her assessment of what this means to charities giving grants to grantee organizations. Stella?
Thanks, Yvonne. Before we move to the next slide, I just want to set the stage by reminding everybody what we mean by books and records. So I know there's a number of people in the group today that are from the finance and accounting area within your organizations, but a lot of you are not. Some of you are from the fundraising side, some are executives, some are volunteers. And so just keep in mind when we talk about books and records, we may think, oh, well, that's that thing, the general ledger, the QuickBooks, the Great Plains. And we think that's what books and records is. Or some of us may have a wider picture of books and records and assume, okay, well, that includes the donor database. In fact, books and records is quite a bit more than just the database and the accounting ledger. So I just want you to be aware that when we're talking about books and records, we're talking about those two basic things, our donor database and our general ledger. But in addition to that, books and records includes all of the documents that are supporting the various transactions that are recorded in the general ledger or in the database. So the background paperwork and documentation, if CRA says we want to see your books and records, they're not going to be looking only for the accounting document. They're going to look at what's behind it. So I want you to keep that in mind when we're talking about books and records. So let's start off by talking about the purest or the narrowest part of books and records, which is the general ledger. That's the thing that your auditor often starts off when they're looking at your annual financial statements. They start their work with the general ledger. And so clearly that's an important part of your books and records and provides a structure to it. But I want you to really, if you take nothing else away from today about books and records, I want you to be very clear that when you are giving grants to non-qualified donees, to grantee organizations, that you don't record it in the same general ledger account as you record gifts to other qualified donees. So if you have occasionally, or if you're a foundation and you normally make gifts to other qualified donees, keep those accounts separate from the accounts in which you record gifts to grantees. It's really important to not confuse the two concepts. And if you have been working through an intermediary or an agent, again, don't blend the general ledger accounts for grantees payments with payments that are made through agents. So those are very distinct, and you'll want to keep those accounting records completely separate. So that's really important. You want to keep track of this. The other accounting component to mention is that when you award a grant to a recipient, to a grantee, the terms of that grant may be requiring that you pay it in installments. Maybe there are milestones to be reached before you pay the second or third or final installment. But the approval of the initial grant probably, more likely than not, creates a liability that meets the accounting definition of liability. It may not necessarily be what you would think of as a legal liability, but you have to look to the CPA handbook for the definition of a liability. Chances are, if you're paying a grant out in installments, the entire liability arises when the grant is first approved. So you may need to record a payable if part of it is going to be paid out in the following year. So just those are two accounting things that I want to mention. So for those of you that are in the accounting group, just tuck those away in your plans for how you're going to be tracking gifts of grants. But now I want to talk about that other part. The part of books and records that goes beyond and behind the general ledger and the actual accounting records. And that is, what kind of things is CRA talking about specifically when we're talking about books and records in the context of this new kind of payments that we may be making? So one of the pieces of the puzzle is, what is your organization's policy on making grants? Well, this is something new that you're allowed to do. So you may not currently have a policy. So if you are contemplating making grants to grantees and you have not done so in the past, the first thing you need to do is develop a policy. How much risk are we willing to accept? What is going to be the approval process? What kind of records are we going to, or applications are we going to ask for from the grantee? Who's going to approve it? Is it going to be approved at management level? Is there a board committee that's going to do the approving? And all of that needs to be defined in a grant policy. And so that's one piece of your gift books and records. Another piece would be the evidence that you keep to prove and to demonstrate that your policy was followed. So maybe the application received from the grantee, a review by whoever is approving it. How did you determine that the purpose that the grant was going to be used for falls within your charitable purposes? It's all fine and good what their purposes are. What you want to do is make sure that the thing that they're doing with the money meets your charitable purposes. So let's just use a simple example. One of your charitable purposes may be to provide, feed lunches to children in a specific inner city school. That's one of your charitable purposes, a prevention of or a relief of poverty type of purpose. And a PTA applies for a grant for an after-school dance program. Well, dance is not part of your charitable purposes. Feeding kids is. So if they are going to use the money to provide snacks at their events, that could be part of your charitable purposes, and you might fund the feeding part of their recreational activity. But you need to demonstrate that you have actually considered that. And yes, the lunch component or the snack component of that activity meets our charitable purposes. Therefore, we will give the snack grant. The other kind of documents you want to keep as part of your books and records is communications between yourself and the grantee. And what Yvonne hasn't mentioned, but one of the things that CRA requires is that you assess the risk of the grant, the risk that your purposes may not be met, that the money may be misspent. So one of the things you'll want to document is how do you assess risk? And again, that's the risk that your purposes may in the end not be achieved by the money. You'll want to have as part of your books and records the monitoring reports that you get back from the organization. So you'll want, how are you making sure that they're in fact doing what they promised to do? Do they give you a report at the end of the project? Do they give you interim reports? Do they have to provide a milestone report before they can get installment 2 of the grant? So all of that kind of documentation is part of your books and records. And then the other thing you'll want to document is what homework did you do to ensure that the grantee is viable? That's part of the risk assessment process. And then finally, that ongoing monitoring, and what did you do to evaluate, yes, this project is complete, our purposes were met, and we can close the file on this particular grant. So those are the kind of things. And the reason I really stress that those are part of books and records is they're often not within the custody of the financial group in an organization. They may be within the custody of an operating group or a programming manager or so on. So just be aware that that wherever those records are resident within the organization, they form part of books and records. So if your accounting group is going to be dealing with CRA, they need to know where to put their hands on that information. I think that's all I wanted to say on this. And I'm going to turn it back to Yvonne. I see there's a question there, but I think we'll leave it for the questions at the end.
Thanks, Stella. Yes, and you made some excellent points. And one thing I do want to point out is the guidance, the CRA guidance, goes into great depth about risk, and they feel that it is one of the most important things that any charitable organization can assess before they give a grant. So you'll see extensive discussion about risk in there. They don't talk much about books and records in that guidance, and that's why it's important that Stella, at least illuminate some of the extra steps that you have to take. One of the things that is in the guidance and is Stella made clear is that when you're giving a grant, you have to decide that you're giving a grant. If you're using an agent or an intermediary, you have to decide that's exactly what you're doing. Or if you're giving a gift to a qualified donee, you have to decide that's what you're going to do. And in your records, they have to be differentiated. So that is why everything in writing can be used for evidence afterwards if you're called upon to prove. So CRA is still talking about written agreements with grantees, just like they've always talked about written agreements with agents or intermediaries. So these are all important things. And I know Liz is putting the slide up about our checklist, and there's a reason why. Go ahead, Liz, and talk about that.
Thank you. Let's just bring my face up. There we go. Yeah, thank you, Yvonne. Well, we're really excited to debut this resource that Yvonne, Kate, Stella, and Jennifer have worked really hard to put together. So this toolkit contains a concise overview of all the legal, financial, and the granting information for non-qualified donees that we have summarized so far, but in more in depth and in a format that is easily downloadable and shared with some other folks in your organization. You can access it with that link that we just dropped in the chat below. And this toolkit also contains a really practical checklist to help your organization ensure that it's fulfilling the requirements put out by these Income Tax Act changes. And you don't have to sign up for anything. This is a free download and it's completely open access. It's just a great resource, and it's part of our mission to help nonprofit organizations like you best fulfill your mission. So please do check it out. I will be attaching that onto our post email as well if you are watching the recording right now. But yeah, back to you, Yvonne.
Thanks, Liz. And yes, this is the very beginning of what might be a very extensive checklist, because there are a lot of questions out there about what does this mean? You know, what is the difference between giving to a qualified donee and giving to a non-qualified donee? What about the old agency regime where we used agents? And, you know, going through a process with an organization to analyze how they're giving is going to be an exercise. Obviously, you know, if you're granting to another qualified donee, because you can actually look up whether they're a registered charity or not, or as defined, you know, the other kinds of qualified donee. That's an obvious answer. If you are using an agent or intermediary to execute on your behalf, meaning they're like an extension of your arm, then that is another analysis to go through in your organization, because one of the things you need to know is that principals, meaning the charity giving the money to the agent, is responsible at law for everything the agent does. You can get indemnifications and things like that from your agent, but sometimes that doesn't give you comfort. That's why the grantee situation, where you're granting the money, you know, you are putting up a wall there for some kind of a liability that might occur that you would be worried about. So that's a fine difference between the two kinds of things. The accounting, well, as you saw from Stella, there is a little bit of a difference between accounting for agents and accounting for grantees now, but more will probably be developed. So a lot of analysis has to go into how you're doing it. But at the very end, CRA says you have to determine how you're doing it and state it and keep your books and records with that in mind. So very high level, the checklist and the information is good. There's one other thing that is a very big concern here now that organizations can give to non-qualified donees. And it's all about directed gifts to a non-qualified donee. And we'll ask Kate, who has a very special interest in this topic, to give us a high level on what does that mean in the new regime. Kate?
Hi, thank you. Let me just pull up my own notes here. So, well, it sounds from the poll that this might not apply to many or any of you just now. It may in the future, and you may not also be aware that, you know, maybe your organization actually is doing this. An important thing to note in the guidance is the limitation that CRA includes on directed donations, which is intended to prevent a charity from acting as a conduit, which is a charity that funnels its resources to a non-qualified donee or grantee organization without retaining authority on the use of its resources. And this is whether the gift is implicitly or expressly conditional when the donor makes a gift. So this is really important if you're ever considering working with a non-qualified donee and accepting gifts to help support their work. I know through a number of the foundations that I've worked with that charities often submit grant proposals or gift proposals for work that's supported through a nonprofit organization that doesn't have charitable status. And they do that, of course, now through a intermediary agreement or agency agreement. So a charity is now prohibited from accepting a gift that is expressly or implicitly conditional on the charity granting it over to a specific recipient other than to a qualified donee, so really another registered charity. And in practice, that means that a charity, for example, could not accept a gift in support of a scholarship or a bursary that was conditional upon it providing that scholarship or bursary to a specific named individual, and nor could it accept a gift that was conditional upon it supporting a specific program of a non-qualified donee. This also prevents situations where a charity solely exists as a fundraising arm in Canada of an affiliate organization in another country. In these circumstances, the affiliate would be making the decisions around the use of resources, and the Canadian charity would not be in a position to act independently, controlling its own resources. So to avoid any concerns regarding conditional gifts, the CRA guidance suggests that charities clearly communicate the following to its donors on its website and in its fundraising communications. That donors can indicate their program preference for how a charity will apply their donation, but that the ultimate authority on the use of those resources must rest with the charity itself. And that if the charity does not use the donation the way the donors prefer it to be used or specify, the charity will not return the donation to the donors. So for a charity to avoid being engaged in directed giving, it must always ensure that it retains ultimate authority on the use of the gift. What does this mean? What it means is that charities can no longer facilitate gift requests on behalf of non-qualified donees, where the award of that gift would include any sort of contractual stipulation as to the use of it by the non-qualified donee. So I couldn't accept a gift, X charity couldn't accept a gift on behalf of Y nonprofit organization, where the gift was conditional upon using it for Y organization's swim program. And that's the case even when the charity would be adhering to the continuing own activities rules or the new qualifying disbursement rules. And I think this will end up being quite limiting for non-qualified donees looking to secure committed funds from donors through qualified donees, which is, I think, sort of part of the intent of the changes. But personally, I think this will likely have a limiting effect on not necessarily a positive one for non-qualified donees. Yvonne?
Thanks, Kate. Okay, then. All new, all interesting. And as usual, a lot of this revolves around charitable purposes. And one of the questions that I know came in advance was, does this mean that private and public foundations can now grant to other organizations that are not qualified donees? And the answer is a complicated one, because most of those kinds of foundations that grant to qualified donees now, that is their charitable purpose. Their charitable purpose, although us charity lawyers would argue that's not a purpose, it's a statement that they will only give to qualified donees. So there is some discussion through many organizations about how do we help the thousands of foundations that have that as their statement. How do we help them change their purposes so they can be more welcoming to give grants to those that are not qualified donees under the new grantee organization regime. So these are all things in flux, and you have now an overview of the basics, and our materials will give you more detail, but believe me, there will be a lot more detail rolling out about this change as the impact is felt and the needs are met by the sector. So let's have a robust, I'm glad we have some time to have some questions, because your questions are very important because they show us what you need to know about this topic. So please let them flow, and Liz will be monitoring and asking the questions. So go ahead, Liz, and tell us what we've been asked so far.
Okay, Yeah, thank you. Before we kind of really delve into this Q&A section, I just want to make a note that sometimes questions arise where we might need more in-depth information about your organization before we can give a really fulsome answer. And so in those cases, we might refer you to one of our free clinic services, not as a way to dismiss your question, but just to ensure that we can answer your question in the most accurate and fulsome way as possible. I will mention a little bit more about those free clinics later. But yeah, so one of the questions kind of combines a few from registration, but just to make it really clear, what would we say are the requirements for sending funds to charities outside of Canada or even to other provinces?
Mhm.
Mhm.
That's a good question. And generally, the general statement is a non-qualified donee in Grand Prairie is the same as a non-qualified donee in Nigeria. You know, seriously, it's not the fact of where the grantee is located. It's the fact that they're a non-qualified donee, and you have to treat the transfer of the funds to them the same way. So it's the fact that they're not a qualified donee that is the difference. So it doesn't matter where they are, you have to follow the same rules. They're, you know, the same rules for the grantee organization. I mean, there are some other concerns like, you know, is it a terrorist country? What is it that you're doing in the country? There's all sorts of other things that might be different if you're doing it in Grand Prairie or Nigeria, but the general concept is this, the application of the new provision of the Income Tax Act would have the same effect. So hopefully
Okay.
that answers that question.
Yeah, great. The question is, what kind of accountability requirements do you folks think are likely going to be required of the non-qualified donees?
Oh, so that's probably an interesting question for Stella, because the question is not of the charity themselves, but the accountability of the non-qualified donees, the recipient of the ultimate money. What are they going to have to do? What are they going to have to do under the agreement, Stella, do you think, for books and records?
Yeah, so I'm going to also address a question about the difference between an agency versus a grantee agreement. And so just for the sake of contrast, so with an agency agreement, the charity that's entering into the agreement is responsible to direct the activities. They're the boss of the agent, so to speak. And in the same way you can supervise an employee, you supervise an agent. With a grantee, you are more interested in your upfront homework and then in the performance measures that are going to come at the end of the grant. So the upfront, before the grant is approved, records are going to, if you're considering doing this, read the material about risk assessment, because that's a big part of the things that I said you probably want to get as part of the approval process, is because you're not going to be the boss of the recipient the way you are with an agent, you might have a greater interest in doing that homework up front and assessing risk. And there's a clear statement, I think it's fairly clear, that if the grant is less than $5,000, you can assume it's low risk. So you might have a lower threshold for subsequent reporting. But in the case of the food program that I was talking about, in an agency agreement, you would have the right to maybe say where you have to get your food from Costco, you have to feed the kids 3 times a week, whatever. You have and you would get very detailed accounting records back if it's a genuine agent and principal agreement. In the case of a grantee, you might say, just when you've spent the $5,000, send us a report telling us what you've done. And, you know, how successful was the program? So the upfront work might be very similar, but the after the fact and during the program work would be quite different, I think, with an agent than with a grantee, because you are more interested in outcomes as opposed to the spending of every dollar, shall we say. So I think those are some big differences between grants and agency agreements. I don't know, Yvonne, I wouldn't mind if you would add to that on sort of the legal differences between the two arrangements.
I think that's a very good assessment for sure, Stella. And the legal, as I said earlier, is all about the liability. A principal has responsibility for everything their agent does. So it's almost like just an extension of you. Whereas a grant is like, here's some money, please spend it wisely, kind of thing. Or in this case, please spend it in accordance with the terms of this agreement. So it's the legal relationship. And I think the grantee scenario should give some organizations and some board of directors greater comfort. And for charitable organizations that are already in receipt of a lot of dollars from other registered charities and foundations, think about how you need to report back to the grantors that you have. They don't control you in any way, but they do give you money and they do expect to report with outcomes and everything. So you are right now in a grantee situation if you're a charitable organization from your funders, whether they be governments or private foundations or public foundations. So what this now allows you to do as charitable organizations is turn the tides and you give that same kind of treatment to others. So there's a fine legal difference, but the accounting and the reporting are quite a bit different and should be, once we go through this in a few years' time, with time passing, it'll become very obvious what's best for your organization in every scenario, I think. So hopefully that answers the question.
Yeah, I think that also answers
Mhm.
the question brought up earlier about what is the difference between this sort of new amendment and the intermediate or agency agreement.
Mhm.
We had one somewhat specific question. So does this mean that community non-for-profit sports organizations now qualify for community foundation and United Way grants, for example?
That's a two-folded question. The first answer is, well, it depends on the charitable purposes of the community foundations and the United Ways, right? They can only make grants in accordance with their charitable purposes. So if the community foundation, like some of them, have as their purpose to give to qualified donees stated, then that's the answer. If you're not a qualified donee, you're not going to get direct funds from that community foundation. So that's the first part. The second part is, regardless of what somebody's charitable purposes are, or what any organization's charitable purposes are, they don't have to give funds to anyone. They don't want to, right? So they might have policies, and Stella did allude to the fact that grantee policies are going to become very important. What is our policy? What kind of non-qualified donees do we actually grant to? Do we grant to sports organizations? Absolutely not, or yes, that's who we grant to. So that would be your policy. It's not going to be, it shouldn't be a free-for-all where you just sit around and dole out money right, left, and center to grantees. It should be as CRA says in their guidance, a risk-assessed process. And who's that to protect? That's to protect your charitable organization as you give them money, that you've done your due diligence and that you actually know who you're granting money to. There's often community associations and yes, many sports clubs that probably are worthy of money from various organizations that they haven't been able to access up until now, and now they may have an avenue. So I think it's a good thing, but they've got to find the right charitable organization or the right registered charity that actually has the purposes to be able to give them grants. So very technical.
Yeah, I will say, I will mention this webinar next coming up pretty soon, but we do have a granting webinar coming up. So if any of these folks that have concerns about granting, and maybe now that they're applying for new grants, that one might be pretty relevant. So stay tuned when I chat about that later. We have another question. So with respect to donor requests, how would you handle a donation received through a third party, such as Canada Helps, when they express wishes for a disbursement? Hope that makes sense.
Well, I think that speaks to Kate's part about directed donation. So is Kate is a directed donation from Canada Helps, which is another registered charity. Is that in the same?
Well, I think if you yourself are a registered charity and Canada Helps, you're getting a donation through Canada Helps, which is a registered charity, there's no concern. The concern is when it's a directed donation to another nonprofit organization. So you wouldn't, that doesn't have its status. And those organizations can't accept gifts through Canada Helps. So if you received a gift through Canada Helps that says, you charity, we want you to support this nonprofit organization, no, you can't do that. But if the donation from Canada Helps says we want to support, X program of yours and you're a registered charity, that's totally fine.
So I'm getting the impression that it's all about what's in writing here as money is flowing. Here's money to do this, and I give you this for this program. It's reducing everything to writing and then properly tracking it in your books and records. Really, how simple can it get? Well, I'm only being funny there.
We got a new question. Has the CRA finalized its guidelines for these changes?
No, the answer to that is they sent out the consultation document in November with a January 31st, 2023 deadline to respond. Many groups responded, including the one that I'm involved in, the Canadian Bar Association Charities and Nonprofit section. And, we did a complete response towards our concerns in that document, as did many of the big sector serving organizations in Canada. There was a lot of response back to CRA to say, improve this, improve that, take this out, take this out. And they've now received all those responses. And we don't know when a final guidance will be released, but sometime in 2023 is my best bet. How's that? But in the meantime, the Income Tax Act was amended. I mean, the Income Tax Act is amended as we said. There's now a definition of grantee organizations in there. And you will read many things that lawyers like myself have written that says those CRA guidances are guidances. The Income Tax Act is the law. CRA is the regulator of charities, and they issue these guidances, and that's their interpretation of the law. So the law has changed, be assured. Guidance or no guidance. In fact, the law changed in June 2022, and the guidance didn't come out till the end of November. And be assured, there was a lot of granting going on in that period.
And as mentioned before, for those questions that still arise or are a little bit more specific to your organization, you can address it through some of our clinic services. So these can kind of look like short conversations or 1-hour problem-solving sessions called clinics between one of our IntegralOrg subject matter specialists. Oftentimes it's Yvonne or Stella, and one of your folks on your team. IntegralOrg is a nonprofit ourselves, so we're really well versed in the nonprofit world, and these free consultations are again just part of our mission to educate and support Alberta nonprofits. You can find out more about these services by visiting our website or reaching out to our admin email. And I'd just like to thank everyone for joining us today.
Thanks for ending on time, Liz. Thanks, everyone. Thanks, Stella and Kate. Bye, everyone.
Thank you, everyone.